Do you realize that the US mortgage market is collapsing right before our eyes? That's because there's a bad conjunction of reduced inventory, high interest rates, and high home pricing that's depressing the sales of homes, and it's sending a lot of real estate brokers scratching their head thinking about what could be their next move. Okay, well, I do have a solution for that, and I'm going to tell you about that at the end of the video. But that bad omen of reduced inventory, high interest rate, and high home pricing is also coming with a lot of lenders going bankrupt, just like what happened in 2008. Okay. I understand. The situation is not the same. The underlying conditions are very different between 2008 and 2022. But who cares what type of terminal cancer you have when it's terminal, right? Because the results are going to be the same. So, what is happening in the real estate industry now? First, Guarantee Mortgage Corporation, a large lender out of Dallas who's been around for about 30 years, just filed for Chapter 11 bankruptcy last week. And that could be the first of many mortgage companies to throw the towel, declare bankruptcy, and go out of business. And it's a reality that's going to cause the 2022 housing crash to be even worse than anticipated. Because over the past 2 years, as you can see in the graph, nearly 70% of all mortgages originated in the US were made by what's called non-bank lenders. What that means is that a majority of the capital flowing into the US housing market comes from companies that are loosely or lightly regulated and that have a high probability of going out of business in an economic downturn. And what's especially concerning is that this share of non-bank lenders at 70% is much higher than it was in 2007 at the peak of the last housing bubble. And we all remember what happened in 2007-2008, right? There was a major crash in non-bank lender mortgage origination, which caused the housing crash to get worse. And the government had to come up with a $500 billion rescue program that we, the taxpayer, had to pay to rescue the banks and lending institutions. It was called TARP. You remember, right? Now, even with the Dodd-Frank law that was passed after the crash, it is possible that we're about to see something very similar play out in 2022. So now, why is it so important? Why do we need to care about the fact that mortgage lenders are going out of business? Because if that happens, it will be a disaster both for the customers and for the real estate professionals. And it's very simple. If these lenders go out of business, it's going to deprive the housing market of loans and mortgages that are needed to sustain home sales. And whereas more mortgage companies will declare bankruptcy, there's going to be fewer and fewer available loans in the housing market. So fewer homes for sale. Supply and demand will make those homes more expensive, with a more expensive credit, a shortage of lender, so fewer and fewer loans. And of course, all of that is going to cause the housing market to crash further. The reality is that the US housing market cannot function without these non-bank lenders. Yet, so many of them are in a precarious financial position. Take, for instance, Loan Depot. They are the fourth largest mortgage originator in America, having made 137 billion loans in 2021. That's more than JP Morgan. That's more than Bank of America. And what's scary about that is that Loan Depot is in a very poor financial condition. You can see here on that graph, the stock price right now is trading at $1.49 a share. The stock has collapsed 88% in 1 year. Needless to say, it's a disaster. And so this is a totally messed up situation. Can you imagine that the fourth largest mortgage lender in America loses money and is being treated by Wall Street investors as if it was going to go out of business? So now we need to ask, what happens if Loan Depot goes out of business? That would take a massive gaping hole in the mortgage origination market in America, which would mean there would be fewer loans and fewer mortgages available for you to go out and purchase a home. Now, the problem is that no one is paying attention to the risk right now. There's this delusion currently in the housing market that somehow, because there's a shortage of home in the US, the real estate market will continue to rise. So many professionals know the storm is coming, but the media is silent and the public at large have no clue. Now, what's crazy is that these problems in the mortgage market are happening just as Wall Street real estate investors are starting to sell out. And all of that is happening just as we're seeing reduced inventory, high interest rates, high home pricing, lenders going bankrupt, and real estate investors going out of the market by massively selling shares of the companies. Talking about the perfect storm, right? Now, what's going to happen in the next months? Because less and less homes will sell, the inventory will go up big time, the demand will drop, and the supply will rise. There will be more houses on the market than people willing to buy, which will lead to a drop in house value. So if you just bought a house in 2022, you can be sure that your equity will drop considerably. Even if you're someone who's bullish on the housing market and you think, this is not going to crash, you need to realize that those four trends occurring at the same time will create a massive spike in home inventory. We are only in the beginning of this housing crash. It's going to get worse and it's going to be as bad as you can imagine. So, what's the remedy? For owners, there's not a lot they can do. Just sit tight and let the storm pass. Actually, owners are going to be rewarded by the inflation because the more inflation we have, the cheaper your mortgage will be. If you have a fixed mortgage, of course. Now, the pain will be for those who have adjustable mortgage because your payment will increase and you may not be able to keep up with the payments. And for real estate investor, it's a disaster. The activity will drop substantially. And since the real estate market is based on sales commission, many will suffer financially. If you are in that situation, you need to do something else for the next 18 months. Something that will keep you busy, that will teach you alternative skills, that will help you financially. You can't keep all your eggs in the same basket. You need to diversify. And one sector of the economy will rebound in the next months ahead. And only those who will take the time to prepare now for that rebound will be in an excellent position tomorrow. The bottom line is that you can't stay there watching the market crash without taking massive action for the future. And that's what I'm doing. I'm preparing for the next rebound. And I'm not alone. We are about 200 people. We meet every day. We discuss solutions, strategies, investment, self-help. And if you think you can learn a thing or two, I'd like to invite you. There is no website where you can go and click on a link. There is no webinar. There is no sales pitch. There is no massive call. That's only for some of you who will understand my message here. And if you are that person who has a vision about the future, who knows that something is brewing and that's going to be big, I'd like you to contact me. Send me a text message at 424-386-0236. That's 424-386-0236 with the subject real estate. I'll get in touch with you. I'll explain all it's all about, what you will gain, and we will go from there. So text me at 424-386-0236 and I see you and I talk to you very soon. Bye-bye.